Hello everyone. So one of the viewers by the name of Elden Leo actually sent me an email asking a couple of questions, and I feel that these questions are really something that every investor, when they're starting up to invest in Chinese companies, that they face, and hence I wanted to address it through a video so that I can reach out to more people who have similar thoughts or questions. So let's hit it up. Alright, let's start with the email first. So it's written by Elden Leo, who's a 19-year-old finance student from Malaysia. Dude, finance student. I don't know where your career might take you, but if you become an analyst or something, don't forget this poor guy over here. Send me some stock tips here and there. Maybe, just between us, you know. Anyways, moving on. I'm interested in Ping An Insurance Group. However, I'm curious about certain stuff and I hope you can advise me on it. Bro, I don't take my videos and whatever I say as advice. I don't think I'm at that level that I can provide advice to anybody. I make a lot of mistakes and I can be saying wrong things when I talk over here. So please, whatever I say, don't take it as advice. Take it as a stepping stone and something that you can use to research further on and verify. A very big thing is go and verify whatever I say, because I might be wrong, and I'm always constantly asking my viewers to correct me in the comments below if I ever say something wrong, so that I'm not spreading any misinformation around. So yeah, moving on to the question, right? I would like to ask whether buying the Ping An company's A share will entitle me to the voting rights of the company. The shareholders' rights in China is so confusing, and I'm unable to get the information on whether I have the voting rights to the company. This is very interesting question, and just for the information of people who don't know, A shares is a class of shares of companies that are listed in China. There are many other classes as well, like B shares and stuff. So yeah, and this is a really good question, and we'll look into it. The second question is, I saw that Ping An is listed on the OTC market in the US. There are also many Chinese and foreign stocks listed on the OTC market. May I ask if investing in OTC market is safe and similar to investing in stocks from the particular country itself? So both these questions, right, are actually not just for Ping An itself, but it's valid for all the other companies out there, Chinese companies in particular out there. I hope you can teach me about this. Thank you so much in advance. So yet again, bro, I don't think I can teach anybody at this moment. My knowledge of investing is very limited, and I could be wrong, like I said earlier. So please go and verify. I'm glad that you're giving me that honor by saying I could teach you something, but I really feel that I'm not at that level yet, and I don't wanna, take the responsibility of teaching someone wrong things or whatever. So yeah, with that covered, let's go on and look into answering the question. So first of all, generally it's about the voting right, and what are you buying into. So mostly for Chinese companies, right, there's two things. Either you buy into the actual company, or a more common one, if you're as a foreigner buying into Chinese companies, is that they actually have a shell company that is incorporated outside in another country. Let's say most commonly is Cayman Islands. So they will start a company over there, and they will have a contractual agreement between the main company and the shell company, where some of the profits flows to there, and it mimics the performance of the actual company. And most probably when you're buying Chinese companies, you're actually buying into this shell company, not the actual company. So you have no rights over the actual company. Sometimes it is possible for them to have a contractual agreement where you get the voting rights even though you're investing in the shell company. But yet again, it's just contractual agreement, and China itself doesn't officially acknowledges such agreement, and they can cut it off at any point. I've shared this in another video, so if you want to learn, you can just go and watch that video. So yeah. So one way to find out if you're investing into a shell company, which is like a VIE structure, a variable interest entity structure, you can find it out by going to the stock exchange website. So let's do that. Over here, I'm at the Hong Kong Stock Exchange website, and if you just go and search the company, let's search JD first. So JD is actually a VIE structure. So if you go into the JD's listing, the thing you need to know you need to look out for is the place of incorporation. So place of incorporation for JD, it is Cayman Islands here. Obviously JD.com, the actual company, is not incorporated in Cayman Islands. They're actually incorporated in China. So why is it Cayman Islands? Well, it's because you're actually buying the listed company itself as the Cayman Islands company, not the real JD.com. So yeah, it is a VIE structure, but then again, it's a contractual one. So if in the same way, if we go like Elden over here wants to know about Ping An, right? So if you go to the Ping An's, so you will see that the place of incorporation for Ping An is PRC, which is People's Republic of China. So you're actually buying into the company itself. That means you get all the voting rights and everything. The reason why some of the companies go through the VIE structure is because Chinese government, they don't allow certain businesses to be owned by foreign investors or foreigners. And it's just certain business types and it's not everything. So whatever the insurance business or whatever Ping An does, it's not, there's no restrictions for ownership. So they can list their actual company overseas or wherever they want to list. A second way to check this out, and a more concrete way, is to go to the, let's say for JD, right, you can go to either their prospectus, the listing prospectus, or you can go to their annual reports and you can just search. You can search for voting rights, you can search for VIE structure. So let's say we type VIE, right? And yeah, so just go through that. Am I typing it right? So yeah, so under the risk, you'll find that they will talk about the VIE structure risk, and you'll see all the PRC law can at any point deem it to be invalid and stuff. So under the risk, they will also always mention the VIE structure risk. So if a company is listed through a shell company, then obviously you'll find it over here. And also the voting rights, right? You can actually find it here. I've actually done it on the prospectus, so I will just show it to you there. All right. So another thing with voting rights, whatever, you are particularly talking about your voting rights, right? Another thing that companies do is they have different classes of shares, where one class of shares has more voting rights than the other. This is very common around the world, and most of the founders will go for a structure where they have more voting rights. So even though their holdings shrink over time, they still maintain their control over the entire company, and they are the majority. They have the voice in the company. So it is very common within Chinese companies as well. So as you can see over here, JD itself has two classes of share, class A and class B, and class A has 1 vote per share, whereas class B has 20 votes per share. So which is a huge difference, right? And somebody did the calculation over here, and you can see that for JD, right, Richard Liu has nearly, this is dated quite a bit back now. His position is about 14%, but just taking it as it is, Richard Liu, his position in JD.com is 15.5%, right? But he still has a control, he has 79.5% of JD's voting rights. So this is the way where CEOs or the founder itself, they maintain their control even though their position is diluted in the company itself. And it is very common with Chinese companies. Whereas for Ping An Insurance, I didn't find any such information. I tried to find, but I couldn't find. And also for VIE structure, right, if you try to find out VIE structure, you'll not return you any results because Ping An isn't a VIE structure. Also take note that you mentioned that you're investing from Tiger Brokers, right? Which is, for any broker per se, if you're investing in foreign companies, right, the shares are not held under your name, and it is actually held under the brokerage itself. So they are the custodian for your shares. You get all the monetary benefits and everything. And some brokers will, if there's any votes to be made for any company rulings, right, then they will pass down the corporate action to you, so you can make it through the brokerage, even though they are the custodian of the shares, but you are making the decision on what thing to vote on. but there could be some brokerages that don't have the service. I'm not sure about Tiger if they have the service or not, because I've not come across any of the corporate actions yet. So yeah, this is something that you can go and check out on their website. Most probably Tiger brokers will have this feature. But anyways, let's go back to your question again if I missed anything. Buying A shares of the company. So yeah, A shares, usually the case is that according to the rulings by the Chinese exchanges, right, you're actually buying into the company when you're investing through A shares. But there are certain restrictions, like how much you can buy and sell from A share within a month or something like that. There are certain issues, but most probably you'll be getting buying into the actual company and you'll have the voting rights. But then again, you should always go and check within the individual companies. I have personally not invested into A share ever before, just because I can't understand their financial reports, right? And it's very, very hard for me to, I mean, I don't speak Chinese or read Chinese, so it's hard for me to find out if there's any such structures or what is the voting right and all those things. So I don't want to comment much about the A share part. But from my understanding, it is all the companies that are incorporated in China who are getting listed in under A shares. So yeah, but if you're investing, make sure you understand what you're getting into, so you go and read the annual reports. All right, moving on to your second question. Ping An is listed on OTC. So yeah, if we go back to my Internet Explorer, so yeah, OTC market, right? I don't think I have to explain what they are, but I went on to one of the so through Investopedia, you'll see all the pros and cons, right? So usually why companies would list on OTC platform is that they don't want to go through all the hassle to list on an exchange, or they can't meet the requirement of a proper exchange, so they can't list there, so they trade on the OTC market. Whereas for companies like Ping An, right, they just don't want to be listing there, right? They already have their primary listing in Hong Kong exchange. So what's the point of going and listing on the US exchange as well, unless they want all the capital access to the US investor, which I don't think Ping An wants for now. So they just have the OTC over there where they are trading the H shares itself. The advantages that you have is, in particular, on the H shares, right, the lot size is pretty huge, 500 shares per lot, which is about $6,000 to $7,000. And for a small investor, it's hard to come up with that kind of tranches to invest in, and it's very hard to dollar cost average. Whereas on the OTC market, you can buy any amount of shares you want. On the other side, you don't have any of the cons that you usually have in the OTC market, usually the restrictions or the regulations on the companies trading on the OTC market are quite low. So there's a lot of false information. There are periods where the companies won't report their earnings. The reporting standards are not strictly enforced, or it's not so stringent. So there could be years when some of the companies won't even report their earnings. So yeah, that's the kind of issues you face with the OCD market. But whereas for companies like Ping An, right, they're already listed in Hong Kong Stock Exchange, so they are abiding the laws or regulations and the rules of Hong Kong Stock Exchange, right? So you don't have to be worried. You will always get your earnings report and all the announcements and everything made properly, even though you're investing through OTC. The company is the same, right? So all the announcements and curriculums are all gonna be the same thing. So that's one thing. But the place where you might have trouble when investing in OTC is, right, the trade volume is very, very low. So if you go and check it out, right, this is the OTC listing of Ping An Insurance, PNGAY. So if you see, the average volume is only 238,000 shares, whereas if you go to the Ping An Insurance, the main H share listing, right, the average volume is 31 million shares, which is a huge gap. So obviously there's less liquidity in the OTC market compared to the bigger exchanges, and you might face difficulty when you're selling your shares. So if there's no buyer to buy your shares, right, you might be selling it at a very, very low price. So even though you see the current price is at $19, right, for the OTC listing. When you try to sell it, there might be no buyer at $19. It could be, it's very easy to happen, and you might be selling at maybe 18 or 19. So liquidity is an issue with the OTC market, and if you are okay with that, then you can invest in it as a very small investor, right? Obviously you're not going to be selling more than 238 million shares, right? So yeah, you might be able to go through it, like you're selling like maybe what, 100 200 shares, buying 200 shares. So for you it might be okay, but as you become a bigger investor, you don't want to be in the OTC market. That's my opinion. So I hope I was able to answer your questions, and if you still have something that, like, you want me to explain, then sure, just put it down in the comments below. Until then, ciao.